cryptocurrency trading thing. They invited all the TikTokers on there to talk about trades of hers that they're following, making all kinds of money. Say if you can't be
Profit. Very profitable.
yeah. With 9 out of the last 10 right. That's 45 days later too. Can't beat 'em, join 'em, what do they say?
Start tracking me in the dojo.
That'd be cool. Apparently it's wildly lucrative. Hey, welcome to the Closing Beat, everybody. Happy Wednesday. How we doing out there? Hope you're having a good day. All is good. We're financial advisors here at Jazz Wealth, and we do things a little bit differently. So I hope you check us out, jazzwealth.com, if you're interested. We do this show every day just to talk about the stock market, let you know how things are going. And hey, if you're one of our clients, I don't always get to meet everybody, right? You're all over the world at this point. You can now show me a picture of yourself. I'll show you what I did to mine. You go in the dojo there, you can upload a new image so that when you are in there looking at your account and whatnot, you can actually see, you can put yourself in there, right? And it works on the phone too, by the way. So go on your phone, and if you hit upload a new avatar, it'll pull up your phone's camera. Let me see yourself, man. Let me know who you are. Let me see the family and such. So just one of the things we added there while we're trying to test that out for a feature that we're getting ready to add. So I hope you'll do that. Let me know what's going on there. Let me know what you look like. Hey, all right, stock market today. Bit of a calm day, right? Slightly positive. If you're looking at the Dow or the S&P, you can see that off to the right, and or well, it would be your right. So all's good there, but the market did exactly what it was supposed to do, right? So we'll get to that, but if you notice why the market was higher today, it was everybody running to defensive stocks, utilities, some real estate. Healthcare, consumer staples, right? So money's going over there. The problem is that those sectors don't account for a lot of the weight in the S&P 500. So unless you have tech and financials and in communication services, you can't get a real rally. So all day the market just kind of hovered right around the average, which is where it likes to stay. And in fact, if you go in the research site, if you're interested in a research site, you can, of course, join. It's $13 a month. It's free for clients if you want to check it out. But in the research site, we actually posted earlier today how the market was likely going to close and exactly where. So I showed the intraday chart of how the market overshot, then came back, overshot to the downside, hovered around where it likes to stay on a day after a big down day like that. And sure enough, closed right there, right? So the market's behaving exactly as they should today, which is, I guess, a good thing if you're interested in that. But in the research site, we also posted how does the market tend to perform over the next week. So maybe something you want to check out. And why do I point that stuff out, right? Just the stats and everything. I point it out mainly for the investors to get their mind right. So you know that on a day like today, you're not really going to see a whole lot, right? It's not supposed to move sharply one way or the other. So it allows you to kind of say, okay, cool, there's nothing I need to be focused in on or be paying attention to. I also pointed out for traders, because I know a lot of you are out there trading, doing your thing. And so it pointed out to you to know that you're in a scalp mentality. So if you're a day trader, you're doing quick things. If you're looking to add positions, you may not start brand new positions today, but you may just add a little bit if something starts to move in your favor or whatever. And so it helps everybody keep their mind wrapped around what's to be expected. Now, if something happens outside of that, that would be considered odd, require more analysis, right? But that didn't happen today. If you look at the S&P here, we've officially broken our streak of almost 100 days without a 2% decline. Yesterday, we did get the 2% decline. It's 100 days is not a lot. 900 days, somewhere right around 900 days, is the actual record. It was set in 2007. From 2003 to 2007, we actually didn't have a 2% down day in the stock market. So 100 days is interesting, but it's not a record in any way. Like I said, the research site, we show exactly kind of what to expect going forward there. I'll give you a hint. On a Tuesday, when the stock market falls about 2% on a Tuesday, the average next day performance is 0.3%. Now you can see right here, up top, go to the top of the page there. Where did the market close today? This is the futures market I'm looking at. It's currently closed. 0.3%. 0.34 is the actual average. I think I just said 0.31. 0.34 is the average. We closed right where we were supposed to, right? So it's not, magic or, I'm not like trying to claim to be anybody special. I'm just looking at the stats there. All right, in the S&P, here's what you got. Eli Lilly, a little bit higher today. Oversold, dropped to the downside there. A little bit of a bounce today. Happened to get a few upgrades, or one upgrade today, so that helped move things along. Tyson, strong day. No news. What's going on? 3.5%, right? So when you're looking through your stocks and you go, that's just crazy. Some of these stocks are moving. There's no real news, nothing too crazy. Well, it's a defensive stock. Tyson is one of those defensive kind of areas that people like to go. A couple others, actually. ConAgra was a strong day, off lows there. Otherwise, weak stock. Why is everybody interested in it? It's up 3% on the day. Defensive. They want slow, steady, and dividend-paying stocks. General Mills, the cereal and the dog food and such. They had a good day, pretty strong, 2.5%. That's kind of odd for General Mills. Why? That's a boring stock. What are we looking at that stock for? Safety, slow, defensive, dividend-paying stocks. That's kind of the theme of the day today. I'll point out Boeing real quick, reversed all of yesterday. I just thought that was interesting. I had a pretty strong down day after getting rejected off the 200-day, and today just reverses all of that. 3% gain on the day. I thought that was pretty cool to check it out. But if you're looking for weakness, that's going to be all the semiconductors. SMH is a way to look at that as a whole, if you don't want to look through individual stocks. If you do want to look through individual stocks, you got names like Microchip. Big pullback here towards the 200-day and 50-day moving average. Kind of an interesting pullback if you're looking at the semiconductors. KLA 10 core or CLAC down 3 1/3%, the same as Microchip there. Lam Research, I'm just trying to show you. Semiconductors were weak on the day. That's all we're really doing. If you look at the Dow, you got the Dow slightly higher on the day. That's what the focus is. Hey, it added 100 points. That's pretty cool. Last place year to date. That's the problem. It is the weakest sector so far this year. But over the last 5 days, it's the only index that's managed to stay positive. As of now, managed to stay positive. So if you're looking for that short-term relative strength, there may be some names in there that stick out to you. Also, it keeps it exciting for our Guess the Dow game, and Cody's going to tell us about where we stand.
Yeah, your new top 5 today. We got Glade Terry, who's a client of ours, awesome client of ours. Ayla, don't tell me if I pronounced that incorrectly. I assume that's correct. And then your leaders from yesterday, Matthew and Chris, round out the top 5.
So
also,
go ahead.
I've made Stacy from HR aware that you have been out of uniform all week. So if you could get that fixed.
Yeah, I got the memo today. I don't know why. I went to Knoxville over the weekend, and it was going to be cold up there. So I was like, well, yeah, you get to wear the hoodie, So I took it up there, and just the missus got to wash them, That's all it is. But hey, congrats to the people playing Guess the Dow. Hope you win. Of course, you're welcome to play. No strings attached. It's no games being played there. Just a fun game of Guess the Dow. If you look at the NASDAQ there, really, the NASDAQ was held back today by a lot of the tech names, in particular semiconductors. So if you're looking through the NASDAQ, you're going to find NXPI. There's a lot of the same names. Applied Materials, which otherwise looks pretty good in the midterm. CLAC and all those names. JD.com was also lower. Chinese names a little bit weaker in general. They're just kind of continuing that after having a little bit of a bounce following all that regulation and all the great stuff that they did there. All right, sector-wise, it's going to be all defensive today. I've already mentioned that. And I mentioned utilities. Look at a little bit of a rally here in utilities. Consumer staples give you a little bit of a rally. These are your leading sectors today. Healthcare with a smaller rally, but still doing its thing. If you look at the utilities real quick, you got a 5% pullback over the last 1 month, and you can see it. I mean, that's, you can kind of see the drop there. Broad rally today, but I'll point out a couple names. Nextera Energy off the 200-day moving average, oversold in the short term, got a little bit of a bounce today. That was one of your bigger contributors in the sector. And Southern Co. Also off the 200-day basically after being oversold. These are the ones that led you on the way down. They're helping move the sector on the way back up today. Consumer staples, this is the exciting part for me here. Investors, all they wanted to do was look for defensive names today, right? Now, what does that tell you? Why would they go shopping for that? Are they excited about the prospects of tech stocks and bank stocks growing in the future or communication services? No, they're worried about that. That's the signal that you see that's actually quite obvious to take a look at. So consumer staples actually moving higher here today. And really the big movers, if I could point it out, were like Pepsi. So Pepsi moves about half the speed of the market, yields 2.5%. There's nothing exciting about this name, but that's where the excitement was today. And whenever you look at Pepsi, you look at Coke, oversold here in the short term, moves about the same speed as Pepsi, so a little bit slower than the market there, pays about the same dividend, around 3% actually. So people happy to take that slower movement, a little bit of a dividend to make up for the difference, hopefully. And while they're at it, get a little bit of a discount down here, right? It's sold off. Now I'm happy for the staples type move, the defensive move today, because Mondelez moved higher. Now, granted, I only had one contract. The order didn't get filled there, but they came from Mondelez as well. The oversold bounce happening today in a bigger way. It was the 5th biggest contributor today to the sector, and of course, that's cool, right? Always cool to take a position and see it do well the next day. You got energy. So energy, you're at nearly a 10% rally here, right? If you just look at the last 5 days, it's almost 9% or just over 9% at this point. So if you look at energy now, it is the leading sector for the year. There are 13 percentage points between energy, which is the leader, and I believe financials is in second place there. So to give you an idea of how much in the lead it actually is, financials is in second place there. Looking at real estate as well, a little bit of a bounce, right? 0.6%, nothing to sneeze at there. Got a small bounce there. It's about 3% that it fell over the last month. Remember, this is one of the stronger sectors overall, so just a little bit of a pullback there. That's fine with me because it helped my Crown Castle position. Got a slight bounce on that one. Very happy to see that. And those two are going well. The one that's giving me a little grief is FedEx. Refuses to bounce yet, which takes us to the new highs and lows for the day. FedEx made a new low. Right? Not much I can do about that one, but hovering right about at the money, I would say, for the puts that we sold the other day. It's a short-term position. We're not short-term traders here. I just like to share some of the fun stuff that we're looking at day to day, just for personal accounts, right? We're not like trading actively in our clients' accounts. We do not do that here. Hartford Insurance Group was one of the new highs. There was only 6 new highs for the day. Just thought this one looked strong. You're in the insurance financial space here, and you got a stock that refuses to pay attention to the market. Just a slow, consistent uptrend. That's always a good thing. You got AutoZone. Anything related to car repairs, repairing used cars, because people can't or will not go buy new cars right now. They're doing really well. So you look at those. O'Reilly's another one to look at. And then Cabot Oil. Boy, it just doesn't want to give up, man. It's just like that hurt animal that just won't give up. It hit new highs, closed inside of yesterday's range, I would say, but still very extended here. These are tricks. You look at that and say, well, maybe it's going to go again. Maybe there's going to be another move. There's not going to be another move. I'm just throw that one out to you. That's that. That's all we got there. Stocks in the news today. Do you want your early earnings season warning? Every earnings season, there's a theme, by the way. Sometimes it's that earnings are expected to blow out. We want to see profit margins increase. You're expected to see sales drop or whatever. There's always a theme, and everybody's looking at the same thing. We don't know the theme this season coming up, but we do know that Sherwin-Williams might have just set the tone for what everybody's focused on, which is inventory and profit margins to kind of say that there. They lowered their guidance going forward. They said inflation and getting access to raw materials has been an issue, but it's getting worse. And so that's their fancy way of saying, hey, earnings are coming up. Like, don't worry too much if our sales are a little lower. It's not because we suck. It's because we can't get access to the raw materials to make the product to sell to the end consumer. And so Sherwin-Williams initially started the day quite lower. Oversold drop that gaps lower, day trader's dream right there. We just talked about that yesterday with a stock that was overbought to the upside and gapped higher. That's a day trader's dream to the short side. Nonetheless, I think this is the first of what you're going to see in many names starting to say, it's not that sales are the issue. We could sell stuff if we want to. It's just we can't get access to what we need to produce the widget to then go sell to somebody. That's likely what the focus is going to be on. Who has access to the materials that can continue to drive their sales and who's been left in the dust? That's probably going to be the focus. We'll see what happens. Micron was weak with semiconductors today, but they have an excuse. Earnings were better than expected. They did lower guidance going forwards. The whole chip thing, they keep talking about the chips, so a little bit of a miss there. Lucid, the guys that make those electric cars, you fancy yourself an electric car person? Well, if you're willing to spend $77,000 base price for an electric car, Lucid wants you as a customer there. They've started production there. They said we're on track for 2022, 2023. They've got 13,000 orders in place. Stock was higher by 7% on the day, and now you know why. Dollar Tree, they're already buying back shares, like $1.5 billion. Well, they said, throw another billion on the pile. We're going to buy back another billion shares. So now they're at $2.5 billion in total shares they're going to buy back. That's the reason your stock moved higher today, 16%. We happen to own it, so happy to see that. And then Worthington, steel production. Think of them as steel production generally. So the stock gap's higher on the day. Steel processing sales up 90% year over year. Right? So you can break down a company's earnings and look and see where they're making money in their different segments. You want to know every segment for Worthington, what sales were higher, I believe by double digits, every single segment, except for sustainable and green energy products. Sales down about 10% because it's too competitive, meaning not competitive as in, there's too many people to compete with, but it's in order to be competitive, your prices have to be at a point that's not sustainable. So less sales, probably because less focus on that. The world cannot all of a sudden convert to green sustainable energy. That's a given. That's not an opinion. That is pure fact. We all cannot drive electric cars. We all cannot build homes perfectly that have zero carbon emissions and everything. It has to be a process. So the fact that we're spending all this money to get everybody to move over, it can't work. And if you want an example, if you're old enough, remember the ethanol craze? Didn't work. Can't do it. You can have some people there, and that certainly can be an option, but it can't be the only option. So just wanted to point that out. That's what's going on there. Lower demand overall for them, but sales still very, very strong. What else do we have here? I'll take your questions, but you got Bed Bath & Beyond with earnings tomorrow. You got Paychex coming out, CarMax as well. That'll be an interesting one. And dividends from State Street, 57 cents, Cardinal Healthcare, 49 cents, Bristol Myers, 49 cents in the healthcare space. A little bit of a movement there today. Ex-dividend, or dividend payday. I believe that's ex-dividend tomorrow for both of those. Republic Service, that's the trash company there, 46 cents, and RBC 33 cents. And I believe that is it. Yeah. There you go. By the way, if you're wondering, if you're not familiar with this, you see interest rates rising slowly and hopefully continue to rise. There's a negative correlation historically between interest rates and the stock market, in particular growth stocks, large and mid-cap growth stocks, right? So rates rising weighs on the market. That's just a simple elementary way to explain it there. So keep that in mind because that's actually kind of happening right now. Rates are rising, the market all of a sudden a little bit weak. Where's the weakness coming from? Your growth stocks, tech stocks, right? So you don't have to overcomplicate what we're probably going to have to spend a lot of time talking on soon, which is interest rates rising. How does that affect oil, gold, the stock market, the small cap stocks, and all that stuff? We'll try to keep it simple and just not make you feel silly or dumb for not knowing. Just think of it almost perfectly inversely correlated, right? So if you want to sound fancy, that's how you'd say it. Right now it's a 0.6. So a negative correlation, right? So for every one, not 1 percentage point, but for every one rates rise, you have a 0.6 drop to the downside. So think of that kind of seesaw, if you will. Yeah. Yep. You think we're turning into a taper tantrum there? Well, it would be sort of shocking, right? Because the Fed has done nothing but be really, really mouthy in a good way about telling you what's coming up. So hard to believe that. It'll be a real sign of what buyers are really there if the Fed drops out and as they drop out. Yeah. You like the old man jacket? I actually like the jacket. It doesn't quite fit. It's a little snug on me. I just got it from the Salvation Army down the street because I'm like, where do you go to get something like that? Use Salvation Army, man. The thrift shop. I think it was like $2.50. Pretty good deal. For a jacket like that? I don't know. No? Is October typically higher or lower for the market? Actually, I'll be covering that in our email this weekend. We'll go through the October seasonal stats as I usually do every month to kind of show you what happens not only for the month on average, but during the month as well. Take it a little bit deeper if we can. Yesterday I worked out right before the show. Workout. I believe you're trying to convince the other guys. Oh, I was lying. Just be honest. We have workout equipment here, but what's the deal with it? It's over there, and we're right. It's trying to build. It's a long way to move it, and so we'll get to it. Yeah, this stuff's going on. You know what I mean? It's busy around here. 2022. You know what I mean? New Year's resolution. Why not? Oh, hopefully we get to it before that, because that means we won't have this stuff built out. That would be a tough one there. Well, there you go. So Doc's playing along with the defensive play. You got Tyson there. Anything defensive it was a broad rally, just across the board. Consumer staples. Very few stocks were left out in utilities, consumer staples, and healthcare. Healthcare had the most amount of stocks that were left out of today's rally, but otherwise, broad rally. And that's how you can tell people are looking for that, by the way. So if it were just one stock that was higher because of the news, all right, news event, and some stocks went along with it that are seen as peers or competitors, right? But today it was just broad sector level buying, right? So when you see the stock market going higher because everything went higher, you would say that's index level buying. People didn't care. They didn't want a stock pick. They just wanted to buy the index. Last couple months, people don't buy the index. They're buying individual stocks, which drive those sectors higher. And so now you have this focus of sector rotation. Money's over here in energy. Money moves over to consumer staples and back and forth because people don't want to buy the index, right? Yeah. What do you think of OHI? I don't know that you meant to say that. I think, were you saying OIH? So big difference. Healthcare, energy. OHI got a little bit of a falling knife thing going on there, right? This is different than when you look at something like Crown Castle or Adobe, right? Or Mondelez. It's a different type of decline. This is like a straight line, consistent selling versus that panic, almost stop ordery, late 1990s kind of sell-off. Yep. Apparently Peloton's popular. So Peloton, well, you had Nordic Track go public today. It's called iFit, I think is who owns Nordic Track. And so that took away a little of the thunder there. And I would argue Nordic Track has an upper hand. Remember, they make a profit. So they already make a profit. They mostly sell to gyms. We're all going back to the real world and maybe going to gyms, not so much wanting to pedal at home. Now, iFit, by the way, is not they don't have as many users or what do we say, subscribers, so it's obviously a different thing. But you could make an argument for them to be more successful financially in the long run. Yeah. Well, I like it. Would you consider a market crash, not just a pullback? Would I consider it? I mean, anything's possible. I don't think we do have a crash here. So I think you do have a healthy pullback people get excited about, and that's a good thing, right? We rally into the Christmas season. You know how stock market does well at the end of the year. So a pullback here would be great, not only for people to be able to buy, but great timing as well. Yep. Ex-dividend was on 9/13. I haven't got the dividend yet. Ex-dividend day is not the same for every stock. It used to be. Ex-dividend day is just the day that you have to own the stock in order to be entitled to the dividend. So then in between ex-dividend day and payday is something called the record date, which is the day that apparently everybody, it used to be done by hand, but that's the day that they say who is on record for being owed the dividend, then you have payday. So think of it like that. There's actually 4 different days. The declaration day, which is when they say we were paying 18 cents, now we're going to pay 19 or whatever it is. Then you have ex-dividend day. You got to own the stock or you don't have access to the dividend. Anything after that, you don't get the dividend. Then you have the record day, just the day that your name's on a list. And then the payday is the final day. Taking me back old school, man. That was back to the days when we had to learn. It's DERP. I think I did a video on it. So you have to remember DERP, D-E-R-P is how that goes. So you're actually going to see 4 days. You want to look at ex-dividend day, the most important for you, and payday, of course. Yep. Why go out when you've built a home gym? Yeah, because we all use the home gym a lot, right? That thing. You hang your clothes on it and stuff. Come on. We're the people that are honest anyways. I think the Santa Claus rally, I think if you do get a pullback here, you have every scenario set up for a Santa Claus rally. Even the tapering, which is likely going to happen in December. Yeah, I know. Gotcha. Well, hopefully I was able to answer some questions, teach you something new today. If not, there's always tomorrow. We'll be back tomorrow to do it again, as long as you hit the subscribe button, right? That's what I'm supposed to ask you. I never ask that. Would you hit the thing? Hit it so I don't have to ask anymore. That'd be great, actually, if you just all hit subscribe. All right, enjoy the rest of your day. I'll quit picking on you, and we'll see you tomorrow.